Now, Nigeria's borrowing binge has been one of great concern and has also evoked a whole lot of discussions and sentiments across board. The country's public debt has risen so far by 21% in 5 years. Now, following the decision of the Senate to approve the $16.23 billion and €1.02 billion loans requested by President Muhammadu Buhari, the nation's public debt is now set to rise further to about 42 trillion naira from its current 35.47 trillion naira. When executed, the fresh borrowings approved by the Senate combined with the $4 billion Eurobond loans will increase the external loan component of the national debt further by 51% to hit $54.87 billion from $33.47 billion at the end of June this year. While the federal government insists that its debt-to-GDP ratio remains within a safe range of about 23% thereabout, it has also spent most of its revenue for years to service debt. While the deficit appears manageable when compared to the government's total projected revenue of 10.13 trillion naira for next year, actual revenue for recent year shows that the trend spent in most of government revenue on debt servicing may also continue well into 2022 and even more. Joining me now to discuss this and much more, I have investment analyst Ayorinde Akinloye. Ayo, thank you very much for joining us on the show today.
Good afternoon. Thank you for having me on the show. It's always a pleasure to be around. Thank you.
Ayo, we have so many questions and mixed reactions with regards to borrowing. That's not necessarily new. But the bigger question at this point in time is why this approval at this point in time, when we are looking at issues around proper education, better infrastructure, primary health care, infrastructure development across board, improved sectorial balances, ease of doing business, and a whole lot more, and looking inwards at a time where global economy is also cutting costs. The other argument is that, well, we just have to borrow to sustain the economy. Do you understand both sentiments, and where are we likely to get things wrong with these loans?
Okay, thank you very much. So clearly, when we look at the two angles, you can make a case for both sides of the argument. First, you look at the fact that for Nigeria, there's a lot of work that needs to be done in order to position the economy to compete, globally. Number one, like you mentioned, from the side of infrastructural developments across the economy, from road infrastructure to public healthcare systems, educational, the education infrastructure and things like that. So it's understandable why the federal government continues to borrow aggressively or follow a more aggressive debt borrowing plan in order to fulfill some of these infrastructure needs, basically. But at the same time, you look at the government finances and even looking at future projections, things are not looking very rosy and interesting, which has continued to raise fears of fiscal sustainability for the Nigerian sovereign going forward. For example, you look at the 2021 budget performance, so far. When the 2022 budget was being presented, you look at the performance from January to August. Debt service, that's our cost of servicing our total debt was about 93% of our total revenue. So we're literally spending almost everything we earn as a country to service our debt balance. So you look at all these figures and they don't look very interesting. Revenue is not improving as much, which is why they need to borrow to cover that gap in revenue anyways. So looking at both sides, you can give arguments for both sides, but clearly a lot needs to be done in order to strike the proper balance. And in terms of to what level to what level can we continue to borrow to fulfill these infrastructural obligations, because clearly we need them, but at the same time we need to be careful to ensure we don't jeopardize the fiscal sustainability future for the Nigerian sovereign.
And then taking on your very last words, being very careful, that's what the call from the World Bank is highlighting on in terms of debt transparency. What do you think the World Bank is really making emphasis on, especially putting Nigeria within the scope of low-income developing countries?
Okay, yes, definitely. The alarm bells are all over. You look at, yes, when you look at the country's GDP, I'm sorry, debt to GDP ratio, clearly you can see compared to so many countries in the world, even within the emerging frontier markets or even the low-income countries, developing countries region, really, we are still very much below the average. But that is really not the main concern here, because when you look at the reason why debt to GDP has always been a measure of debt sustainability is because most of these economies have very huge formal economies that they are able to bring under the tax net. But in Nigeria, a huge size or huge portion of the economy is largely informal, which means much of the productive activities within the country are not properly captured within the tax net, which means federal government is not able to earn from the GDP being produced within the economy, which means more revenue for them, which means they are not able to get the necessary revenue, and it means that they can't. That definitely creates a revenue problem for the federal government. So the alarm bells are all over. The debt to GDP ratio, yes, may not be looking so bad, but when you look at things like our revenue performance, so just to give a bit of perspective, so far this year, we've done less than 70% of our budgeted revenue, which means already we're pursuing a budget deficit, which means we already had an expenditure framework that was already much larger than our revenue. But now we are underperforming on revenue, and on expenditure we are doing very well, close to about 90-95% of expenditure performance. So you can look at that and say already we already have a budget deficit, and then we are not even meeting up with our revenue targets. It means the deficit becomes wider. So that is also a key concern. So going forward, I think for us, the main focus for the government should be on trying to improve that revenue part of things, because you look at the fact that, okay, like I mentioned earlier, I said we have not done, up to 70% of our budgeted revenue this year. You look at the average over the past 5 years, it's somewhere around about 74-75%. If you look at the average over the past 5 years, it means we are not improving so much. In fact, it looks like we are declining. So a lot of efforts needs to be put into trying to improve the revenue profile of the Nigerian sovereign, of the government as a sovereign, to be able to capture a larger percentage of the economy, that's the GDP, the productive activities in the economy, to be able to capture a larger percentage of that within the tax net. And by doing that, revenue improves significantly, and then it means it reduces how much we would need to borrow, and at the same time it helps us to be able to quickly cover up most of the debt payments that would have to cover up, and sort of at least restructure our debt balance and put us in a much better position. So definitely those are key things that must be looked into over the next say 3 to 5 years, in order to reposition us properly and have a much good looking fiscal sustainability position. Also, another thing that can be looked at is trying to look at creative ways by which we can still borrow, but at the same time we would not be altering our fiscal sustainability positions too much. For example, maybe considering the possibility of issuing a zero coupon bond, where we wouldn't have to be paying yearly annual interest payments on the debt, and all we need to do is to make a final payment on maturity. So this creative means trying to explore creative solutions to solve our debt problems are things that we must look into. Otherwise, most of the concerns that the World Bank is highlighting at this point in time would, at some point in time crystallize, which would definitely not be good for the country and the economy overall.
Ayo, now, as part of the debate we've also had in terms of these loans as well, we've seen some scrutiny and questions raised as to the terms and conditions of these loans, the repayment plan, the strategy there. That's what senators are calling for, clarity. Hinton, just going back to what the World Bank has also said in terms of transparency, let's take a look at our repayment strategy and the volume of loans we are taking, the terms and conditions which you just made mention of. How much of a major determinant are these performances? And let's take into consideration, looking at the fact that we also have the scrutiny of the 2022 budget proposal also being presented, and also looking at the 2022 finance bill also expected to be passed by the end of the year. How much of incentives do you think we need at this point in time within the finance bill to stimulate the economy further? And also going back to the question of implementation index, how do we get clarity on the terms and conditions, our strategy for repayment and implementation index? How do we get clarity with these?
Okay, so taking all the things that you've mentioned, first from the aspect of the terms and conditions regarding the loan repayment plan, the structure of the loan. How are these loans, are these debt agreements being structured? Because just to give a bit of insight into the structure of the current loans that were approved by the Red Chamber about 2 days ago. Basically, these loans will come mainly from multilateral organizations. So, for example, the China Exim Bank, the European Investment Bank, the French Development Bank, for example, Africa Development Bank. These are some of the parties. World Bank also. These are some of the parties that would be contributing to the aggregate loans of about $16-17 billion. And largely most of these loans will be project tied. But definitely there are conditions tied, in case of default or not being able to repay and meet certain obligations. I think clearly the federal government needs to do more in order to allay the fears of citizens, because there are always speculations that, if Nigeria refuses or is unable to meet up with these debt obligations, then we could see a situation whereby the lenders will take over the federal government's assets or key installations within the economy, strategic national assets, basically. And in some cases, yes, in some cases it might be true, in some cases it won't be true. But clearly the federal government needs to do more in terms of whenever these kind of loans and transactions are taken, there needs to be proper communication with the public, with the players within the economy overall on what structure is this, are these loans going to take, what are the repayment conditions, are there moratoriums involved, what's the payment terms, what's the interest on these loans and things like that. What's the penalty in case of default? But trying to be in letting citizens and players in the economy aware of the risk involved with some of these debt transactions that have been structured. Then in terms of looking ahead to being able to repay, repayment abilities, when you look at the 2022 budget, you look at projections looking ahead, are things looking very positive. I think, like I've mentioned, if we go by what has happened so far over the past, say, 3 to 5 years, I would definitely say it's not looking positive. For example, 2022 budget is significantly larger than that's in terms of expenditure, is significantly larger than what was budgeted for 2021, and I think by about another additional 3-4 trillion naira based on the proposed budget, right? And revenue projections are also higher. But you look at the fact that the key fundamentals underlining the revenue projections are not so much changing. For example, you look at our crude oil production, based on OPEC reports for crude production as at last month, Nigeria is no longer the biggest oil producing country in Africa. The biggest oil producing country in Africa right now is Libya, which means oil, which is a key part of our revenue, we are significantly lagging behind because there are lots of structural bottlenecks that most of the oil installations are facing, and it means we are not able to produce to meet capacity. So by 2022, if these bottlenecks are not resolved, it means we may even significantly underperform our oil production targets. Yes, oil prices are still looking very good and kind, but we know how volatile that segment is. On tax revenue, yes, there have been some big wins on the tax side over the past few years, but it's too slow for the progress we need to make. So putting all this together, 2022 is pointing to a situation whereby we would not be able to meet our revenue targets and expenditure will continue to rise. And the fact that we're not able to meet our revenue targets means we'll continue to borrow more, and that continues to pile more pressure and more misery for our fiscal sustainability position. So looking forward, unless these creative ideas are being brought in and put in place to be able to ensure that we manage the situation, things may continue to deteriorate and even deteriorate faster than we expect.
Now, I am still looking at the bigger picture of how to also have a sustainable revenue generation base. You've already touched on some of the elements there, especially within tax. But beyond tax now, let's look at the performance of our base at this point in time. You look at agriculture, you look at manufacturing, you look at our efforts towards investment promotion, you look at issues around insecurity and a whole lot more investor sentiment. We necessarily have not positioned ourselves properly in terms of saying that we can begin to start reducing our debt burden. I'd like to have your thoughts on that, but just after this quick commercial break, we'll come back to this conversation. Don't go anywhere. Thank you very much for still staying with us. We are still looking at the state of the Nigerian economy through the lens of Nigeria's debt stock. And I have with me investment analyst, Mr. Akinloye. Thank you very much for still staying with us. Now, still looking at the conversation we made mention about beyond tax now, looking at sectoral performances from agriculture to manufacturing, the investment climate we have as at now, investor sentiment, promotion of investment in the country, and then one big issue, the challenge of inflationary issues, and then insecurity. How do you see these limiting our base to recover and then begin to cut our debt?
Okay, so clearly these key factors that you've mentioned are quite very much interwoven. We pick it first when you look at the last things you mentioned, for example, insecurity, issues around the inflationary environment within Nigeria. That's the cost of basically doing business. Clearly, all these factors are things that continue to deter businesses. So the first thing, for example, in terms of building a sustainable revenue base is how much of policies can the federal government put in place to rectify some of the to make the business environment more conducive for businesses to operate and exist, properly. When these policies are gotten right, in terms of policies, in terms of institutions that regulate businesses and basically oversee the business process. So what I'm saying, for example, is, the process of starting your business, you want to create, register a business name, register a company, down to getting licenses. For example, maybe you want to go into mining, you want to acquire, the land laws, for example, as they relate to agriculture, all these key factors that revolve around the process of starting and running a business. For example, we recall we've had lots of policy backflips, particularly in key commercial cities in Nigeria, where certain things are allowed and then a year later, those things are prohibited and then, policies are not set in place such that businesses are able to see that sustainability or that consistency in the policy framework of the business environment, basically. Also, when you look at key things like security, which is a key sentiment for foreign and for international investors, as long as sound bites around insecurity or the security situation of the country continues to remain negative, then it becomes much more difficult for us to be able to attract the necessary investor interest to invest in the business opportunities that we have in Nigeria. And what that means is when these companies are not performing, when they are not doing well, we are not attracting enough investments to develop local businesses within Nigeria. What that means is the federal government is losing out on a lot of tax revenue that it could be getting. So clearly lots of work needs to be done on the business environment side of things in order to ensure businesses are able to thrive and they're able to generate more revenue, they're able to generate more profits, which becomes more tax revenue for the federal government. That is on one hand. Also, you look at other key revenue sources, for example, the oil infrastructure, our oil revenue, which is very much dependent on our oil infrastructure and oil installations that we have across the country. How much is being done in terms of being able to maintain these facilities and ensure that, because, for example, you look at the reason why our crude oil production has been declining over the past couple of months now, has largely been as a result of bottlenecks within some of these oil installations and the fact that some of our oil infrastructure are already redundant, such that when during the COVID period, when we had to shut down some of them, now restarting production at some of these oil installations have become so difficult.
Okay.
So can all these things be maintained and improved and sustained? These things are key factors that would, form how sustainable our revenue base can be over the long term.
Okay, Aya, we'll just have to quickly dip into the conclusion of this year's Tony Elumelu Foundation Entrepreneurship Program. We're having live feed here looking at the selection announcement for the day. The program is looking at entrepreneurship, how to have sustainable business. Some of the feed you're having is live from today's activities on the entrepreneurship program and the selection announcement. Well, coming back to our feed here now, Ayorinde, let's just quickly wrap up now in terms of the way we are going to move forward. You've made mention of some items here in your previous speech. You talked about issues around policy somersault. How do you think this also largely deter us from having clarity in our economic agenda? Because at the end of the day, somersaults, you take a few steps forward and then some much more backwards. That's not a sustainable way to move. So let's talk about how policy somersaults, in your own opinion, seem to affect our economic agenda and the prospects ahead, especially when we are looking at cutting our debt stock as well, because the global economy is just looking inwards, thinking outside of the box, looking at much more strategic means of just cutting costs and reducing borrowing.
Okay, so basically, in terms of policy backflips or policy somersaults, basically, those are key things that investors don't want to see, because it creates so much uncertainty, and it reduces that willingness to want to take some risks, because you can never tell what is going to happen with policies regarding that sector in a few years or a few months' time. As little as just within Lagos State here, we know the issues that occurred within the transportation system, where tricycles were banned from being used in certain locations, and motorcycles were also banned from being used in certain locations, and that was just after bike hailing applications were making a lot of waves within the country and generating lots of revenue and taxes also. So all these things must be looked into. Policy somersaults, policy backflips would always create uncertainty, and if there's anything business owners don't like, if there's anything entrepreneurs don't like, is too much uncertainty. Yes, there's always going to be uncertainty regarding economic activities and things like that, but when the federal government or the government or the business policy makers are contributing to that, to the uncertainty within the economy, it becomes undesirable for investors. Also, when you look at our economic policies in terms of how we choose to react to situations, are we going expansionary in terms of fiscal policy, or are we going to tighten? All these things need to be consistent. There needs to be a framework and a journey to where we're going, where every player within the economy understands that journey and sees the federal government working through that process. But until we have such certainty, then investors will continue to be much more risk averse towards the Nigerian economy, which is not positive for us.
Lastly now, Aya, do you see a shift in terms of the body language of government still maintaining that we don't necessarily have a debt crisis at hand? Rather, what we have is a revenue generation challenge. Do you likely think we're going to see a shift, especially as we are still thinking about economic growth, recovering from the COVID-19 pandemic and much more? Do you think all of the noise or all of the highlights policy stakeholders are raising and issues around all of the debt, do you think we're likely going to see the government take up an index that really mirrors the state of the economy beyond what mirage we, according to some, say we clearly have at this point in time?
Well, I wouldn't expect the government to shift ground. I think clearly you can see that regardless of the change of economic decision makers or the people that are responsible for taking decisions regarding the economy since the current administration has been in power, their own economic strategy has been clear in terms of fiscal policy. The idea for them is to aggressively use the budget deficits, maintain an expansionary fiscal policy by relying on the debt markets, both international and domestic, in order for them to be able to meet their obligations and to fulfill some of the projects that they intend to achieve. And I think next year is going to be a very critical year for the Nigerian economy as a whole. Number one, is a pre-election year, which would involve a lot of spending in order to ensure that the elections move on smoothly. Number two, the budget is very huge, the biggest budget in the history of the country. So that is a huge budget that needs to be financed. And clearly, we don't expect a significant improvement in our revenue situation over the next 12 months. So definitely, the federal government will still be heavily reliant on the debt markets, both locally and internationally, for them to be able to push through their ambitions, for them to be able to push through most of the infrastructural plans that they have to fulfill. So clearly, I don't expect that to change. I expect the federal government to continue to remain aggressive to borrow in order for them to basically try to continue to push the economy back to where we were before COVID. But a lot is still left to be desired in terms of how sustainable that is, and then the fact that there are lots of quick wins that can be made on the revenue side of things if we get our acts right. But clearly, the federal government will continue to remain aggressive in the debt market to meet all their budget obligations, and 2022 would not be any different, or the next 12 months will not be any different as we look forward.
And I would just like you to touch on this, also looking at corruption and illicit financial flows with regards to accumulating debt as well. How do you see things playing out? A change in the body language and taking much more serious stance. Do you see that?
Well, clearly, when you look at definitely there's always the concern from the citizenry, or the citizens, Nigerians generally, that most of these borrowings that have been done are not largely used to finance the projects that they're meant to finance, and that most of these funds end up in the wrong pockets, due to corruption and illicit financial flows, basically, and that concern is will continue to remain. In terms of how much the federal government would do in order to clamp down on illicit fund flows and corruption within the government system and within the economy, it's difficult to really say how much progress has been made thus far, and I don't think that will be the major focus, over the next 12 months, really, because, like I mentioned earlier, we are approaching a election year, and all guns will be out blazing on ensuring that the election is a success. So I don't think there will be so much changes on that front, and that will continue to remain a concern and a big topic of discussion on the lips of Nigerians and every player within the economy generally. But as long as those issues continue to remain, definitely it means the citizens or Nigerians as a whole would definitely not have confidence, or will continue to berate the government for continuing to borrow more money, even though the impact of the borrowings are not being felt on the overall economy. And but I don't think there's going to be any major change on that front over the next 12 months.
Thank you very much for your time on the show today. It's been a pleasure speaking with you, and we also hope government is taking cues. 2022 definitely remains a critical pillar in how the year wraps up ahead of the election 2023. Thank you once again, Ayo.
Thank you very much for having me. Always a pleasure.